This is your Wall Street wake-up call. Apple shares on the rise after reporting better than expected quarterly earnings. Here with more analysis is Jasper Lawler, a market analyst with CMC Markets based in London. So Jasper, Apple just made it a mild earnings and revenue beat, but nonetheless enough of a beat to keep the Apple haters in check.
Well, exactly. The beat is going to take the stock higher on the US Open, but what we're looking at is a second quarterly decline in iPhone sales, a second quarterly decline in profits and revenues, and so it's a concerning environment for Apple. I think what's helped the beat is perhaps people didn't expect the SE model to do as well as it did, so that in some ways has stymied the decline, but it's still a decline. And so the outlook for Apple now is, well, where does the growth come from? I don't think, given that they're still selling 40 million units of iPhones plus, I don't think this is a really bad scenario for Apple. The company is obviously doing very well, but the question is, where does the growth come from? Can it move beyond being what is at the moment basically a value company? And I think the Apple Watch as a white knight for the company, that doesn't look like it's happening. The other category in which the Apple Watch is listed in the report, that actually saw a revenue decline. I think probably the big hope that you can take away from this as a future growth story, outside of the sort of moonshots like the car, would be the services division.
Right, and that services division revenue was up 6% to about, or revenue was up 19% rather to $6 billion. But I want to go back to the iPhone for a moment because that 40 million number of iPhones sold still beat expectations, and we haven't even gotten to the iPhone 7 yet, which is supposedly coming out in a few months. How important is the iPhone 7 for Apple to show investors that, look, this is still a driver of growth down the line?
It's absolutely massive. iPhone is still the key driver. Even for the other growing services like services, they still need iPhone units to be sold in which those services can be added on top. So it's still key. Apple's defense at the moment is that it's just part of the upgrade cycle. Obviously, at the moment, we've just had the 6S, 6E. We need those whole numbers. The 7 obviously being the next one, where people really take the leap on the next upgrade. So the question is, how many new features can attract customers in? And I think the sense here is that with the success of the SE, that actually shows that the new revamp of the 6 didn't impress everyone. And so 7 is going to have to impress different classes of customers. And there's a sense here that overall, it's just not going to, it's obviously going to improve the sales, but that margin of increase is just going to be less than it has in previous update cycles.
And what do you make of the stock, Jasper?
Well, I think at the moment it's found a base, and I think it's a good value investment at this point. And I see Tim Cook adding to the dividend at some point in the near future, and having already done so, and so it's going to increasingly become an income stock. And I think for that reason it's worth holding alone, and I think that's why it's found the base at current levels, and I think it's still got a bit of room to move from here.
All right, Jasper Lawler from CMC Markets in London. Jasper, thank you for joining us.
My pleasure.
I'm Scott Gamm, and you're watching The Street.